I'm now going to go to a second schedule here, and on the left-hand side we see the process flow. I'm currently on the create new lease. I'm going to move to the input lease data schedule, and again this is going to open a new template in Excel, where because I'm using the business process flow and I'm in an entity 100, I'm in September, it knows all of these things. I can simply refresh that and it's going to go away, fetch that data from the system so we can do things like submit our lease payment data and our lease information into the system now. So we'll see that in a moment, and we'll be able to see on this particular view, we'll see all of the new leases I've created in my entity for this month. And potentially we've got multiple leases. We've got some that we may have already created earlier in the month. And we've also got I've got the new lease that we've just created now awaiting the data input. So we should see that in just a moment as it's completed building the reports in this template, and I can see that I will hopefully won't make it too limited to zoom out on your screens, but I'll just zoom out a little bit on there so we can see more information on the screen. But I can see that I do have a lease that runs from the 19th of September this year for a couple of years in land and buildings. Again, it was in the US dollar, and it already has some payment information in it, and we can see that's already been submitted. But if I can scroll down here, I see the new lease that we've just created, and within this it's pre-populated with some data. So we said we were going to apply the central discount rate, and we said we were going to take the depreciation rate based on the term of the lease, and therefore it's done that. I can now do a number of things. So for instance, I may want to say that this lease is costing me $1,000 because this is in dollars per month. As a lease payment, plus, for instance, we may have a $200 per month service charge, and I'll make that monthly by using this copy function, and I'll autofill that, and the system has now determined that I want to basically spread that information across in a particular way. I might actually also say that in fact we also want an indexation, and by default this is going to apply an indexation on an annual basis. And I can see if I scroll across here, we've basically made it for the users. So on the anniversary of this lease initiation, we see that the payment, the next payment increases from by the 3% at that point in time. So that's in the September 29 period. Obviously, I'm putting my lease in on today being September 2018, and that date will be whenever we work in the system. So we've got this ability to prepare that information and then save that data back to the system. So we see all highlighted cells there where we've created new data for submission back to the system. It's now saving that data back to the system, and in a moment we'll see that then this is completed, and we'll be able to submit some additional information, because we now potentially want to look at things like the initial discounts that we may have got, some end-of-life costs that we may have for remediations, for instance, and submit that. But obviously that's happening at the start and the end of the lease, as opposed to throughout the life of the lease. And we could have made those numbers variable through that way, should we wanted. Again, we see the lease that was created yesterday, and scrolling down we see the lease that was created today, and we could enter, we maybe received some incentives for setting up this lease, but there are also some costs associated with this lease in the form of an upfront payment, and that's going to impact the asset value but not the liability. We may have an expectation at the end of the lease that we'll have a further cost for remediation and things like that. Should we be intending to buy the lease at the end? We potentially have a residual value that we're going to be looking at, and therefore again boosting the asset value, but not the depreciation, and also not the liability. So until we actually execute that, we really wouldn't impact that. So we add into the system at this point any information that's relevant to the specific lease that we're creating. And then once we've done that, we'll be in a position to calculate the outputs on the lease itself, which we'll do in a moment once that's finished refreshing this report again. And once we've done that, we'll then set it. We'll then go and have a look at the outputs from the report. So that will be there in a moment. So again, all of these things, there was some information on the initial sheet there, which included the service charge. We can automatically include as many different just for things like variable usage fees, which may be related to mileage, they may be related to consumables consumption, servicing, maintenance, whatever. And each of those have the ability to store a value against them that will then be translated into our P&L. But having submitted all that data, I'm actually going to need to calculate the data for this lease. I'm actually going to calculate it not just for the current month, so I could just calculate the current month information, but I want to consider a forecasting scenario. So I'm actually going to calculate this through to the end of the life of the lease itself, so that I can look not just at the current month data, but also at the anticipated life of that lease from now through to its end of term. And if I look at the lease report here, I'll see that will calculate. I'll refresh this in a moment. That will calculate through. I can see we start off with a right of use asset cost determined by the net present value of the payments. We see a right of use asset depreciation, which is determined by a monthly depreciation fee, followed by obviously the opening balance, that giving us the balance sheet movement of our net depreciation, and a book value as well. We also see that right of use asset lease liability, where we've got the liability at the outset of the initiation of the lease, followed by a combination of interest calculation deemed from the discount rate we have, and the capital repayments being the balance of the opening balance, the interest, and again using the standard balance sheet capabilities in BPC to determine that flow. And again, any additional fees that we've got being recorded below. And we see on this example from the lease that was already there, where the payments were actually phased at different points in time through the life of that lease. And we see when we reach the end of that lease, we see that there's no liability remaining because the lease liability was through. And we also see the book value of the asset does drop to nil because there was no retained value in this case. And that's all calculated by the system, and in this case presented to us by the report. I'll just refresh that so that we can see the lease that we just created as well there. So that will show me again in this particular report, shows me all of the leases that we've created in this entity in this month. We have some further reporting later on in the process where we can see all leases, any combinations of leases, and individual lease reports. And we see now, having refreshed that, we have at the start of the lease, we have now all of that information calculated through from our new lease that we've created today. including our balance sheet amounts for our liabilities, the costs for interest, and the P&L charges for our depreciation. Okay, so one further thing that we'll need to do, I haven't done the currency conversion. We've currently got this lease in our entity, in our lease currency only. So I'll just send that system to again convert this lease through to the end of its life, and that will review and mean we can now report at the entire entity level in any currency we want to see. So we can see that in our entity currency within any of our reporting currencies.